Hello, welcome everybody. My name is Andrew Dix, and I am the publisher of CrowdFund Insider, which is a news site, digital news site covering fintech and securities crowdfunding as well. And today we have a panel of experts where we're going to discuss platforms, broker-dealers, and other providers for the securities crowdfunding sector. I'm going to ask each panelist to introduce themselves, but we have Ethan Butler from Delmore Group, Sherry Noonan from Rialto Markets, Matt Goldstein of Dealmaker, and Alan Kanefsky of T0. And we're going to start with you, Ethan, and go around. If you could tell me a little bit about yourself and and what you do.
Sure, Andrew. Thanks for having me today. Eitan Butler here. I'm the chairman at Delmore Group. Delmore is a FINRA and SEC registered broker-dealer investment bank headquartered in New York and founded in 2005. Our roots are in institutional investment banking. And over the last number of years, we've specialized in helping companies raise capital online at scale, primarily online. Through Regulation D, A, and CF. And we've been quite active on the Regulation A side over the last number of years, having onboarded over, I think it's 215 or so Regulation A offerings over that time, including a number of the more successful ones to date. And we assist our issuers with both primary issuance, capital raising, as well as secondary market trading.
Awesome. Sherry.
Great. Thanks so much. My name's Sherry Noonan. I'm the CEO and co-founder of Rialto Markets. We are a FINRA member broker-dealer, and we empower companies in their private markets capital raises via self-hosted solutions and institutional investor networks across all private markets. So that's Reg D, Reg CF, and Regulation A+. Rialto Markets, we also operate an alternative trading system for secondary trading across all private markets. So we'll get into more of that as we go through today. Thank you so much.
Thank you, Sherry. Matt, our Canadian. I think you're muted, Matt.
Muted.
We still can't hear you. You with us, Matt? I think you can hear us, but we can't hear you. Why don't you try and figure that out? And I'm going to move over to Alan first.
That's how you catch a lucky break in life. Hi, I'm Alan Kanefsky. I'm the Executive Vice President and Chief Legal and Corporate Affairs Officer at T0. T0 is a market-leading regulated U.S. trading venue for private securities that utilize blockchain technology. T0 has been a pioneer in this space since around 2015. We own and operate 2 broker-dealers. We own and operate a money services business that touches on the crypto side of our activities. We've been a pioneer of incremental use of blockchain technology in regulatory compliant ways that delivers actual viable product and market footprint to our issuer customers. We've in connection with that, we've developed a suite of blockchain technology solutions, including some of which is patented for securities tokenization, trading, and integration with legacy systems. Part of that, leads us to a view of the unified consumer experience where investors can have one-stop merged user experience to trade across a range of conventional and digital financial products, including these unique blockchain-enabled private assets, cryptocurrencies, public securities, NFTs, and other solutions. And really delighted to be here. Thank you.
Yeah, thanks, Alan. Matt, now hopefully you get your sound working.
Does it? Somebody nod if you can hear me.
I can hear you. I can hear you.
The other song I had in mind is Van Halen, Hot for Teacher, where it says, I don't feel tardy. I was saying, I don't feel muted. But I was. Well, my apologies. Thanks for having me, Andrew. and colleagues. My name is Matt Goldstein. I'm one of the founders of the Dealmaker group of companies, Dealmaker.tech, which is a technology company first and foremost, founded by lawyers. I was a securities lawyer for many years in New York and up in Canada as well. And we were really designed to bring technology into the capital markets to be a online store for issuers who are raising capital so that they could manage all of the paperwork and payments associated with raising capital. And over time, it's really evolved to be a one-stop shop for any merchant raising capital, turning the raising of capital into e-commerce. And so using our platforms, large merchants can build their own community. They can turn their customers, their fans, their stakeholders into a shareholder base by putting an Invest Now button on their website, or by using one of the embedded links that we have in order to promote a Reggae offering or Reg CS offering, or in some cases the publicly available Reg D offerings as well.
Awesome. All right. Thank you, everybody. I really appreciate you all being here, and I appreciate everybody who has joined us for this webinar. Thank you for participating. So to kick things off, I want to go back here a little bit. The Jobs Act was signed into law in 2012, just a little over 10 years ago. And this is the legislation that legalized online capital formation or securities crowdfunding, whatever you want to call it. Reg CF, Reg Crowdfunding, was probably the best known exemption. Then there's Reggae Plus, which was an exemption that effectively nobody ever used anywhere because it was so kludgy until they fixed it. And then Reg D 506C, which is an exemption, an update to old Reg D that allows issuers to generally solicit, which is SEC speak for advertise, online. So this was transformational. And it also created a new FINRA regulated entity called funding portals. And today there are about 70 of these funding portals, although there's just a few that are really active right now. What a lot of people don't understand is that broker dealers, another FINRA regulated entity, they can also list securities under Reg CF as well as Reg A Plus and Reg D. And so we have a couple of broker dealers here today that are able to provide a unique perspective. Last year, the SEC made material improvements to the crowdfunding ecosystem by increasing the funding cap of Reg CF from a little over 1 million to 5 million, Reg A Plus to 75 million, and there are a few other updates, which in my opinion, is having a material impact on the entire sector of finance and bodes well for not only platforms, but for issuers and investors going forward. While we don't have any funding portals with us here today, it's kind of a unique thing when a new entity, FINRA regulated entity is created. And so I wanted to start by having somebody discuss, why this was created and exactly what are funding portals. And so I'm going to pitch this question to you, Eitan. If you could kind of share, what is a funding portal?
Right. So a Reg CF funding portal, portals were created really to facilitate crowdfunding transactions. And compared to broker dealers, funding portals enjoy streamlined SEC registration process and have relatively pared down regulatory compliance burdens. They have limitations, right? So they're primarily designed to facilitate Regulation CF listings and investing in Reg CF offerings. And whereas as opposed to a broker dealer, they cannot offer advice or recommendations. They can't solicit purchases to buy securities on their website, and they can't receive commissions for the sale of other types of exempt security offerings like Regulation A or Regulation D, which broker dealers can. Dalmore wasn't particularly focused on Regulation CF prior to the previous March 15th, when the limit for Regulation CF was increased from 1.07 million to 5 million. Since that time, we've become quite active on Regulation CF. And I think, I imagine the industry is going to continue, and broker-dealers are going to continue to emerge to offer Regulation CF services to issuers.
Okay, awesome. Does anybody else want to add anything to what a funding portal is? Anybody want to jump in, or do we have that covered?
Yeah, look, I'll just add 2 cents on that, and agree with everything that Eitan said. Is under Reg CF, it's just worth remembering that an issuer cannot conduct the offering itself. It either has to use a traditional broker-dealer or a funding portal. So you have to use one of the 2 flavors of intermediaries, and funding portals kind of round out that group with what was contemplated as an easier path for folks to assist companies that are looking to raise capital under Reg CF than becoming a broker-dealer.
Okay, awesome. All right, thank you. So, Sherry, I'm going to jump over you to get a broker-dealer perspective here. Before I ask you that, I wanted to mention that you previously worked at Goldman Sachs, where you held senior positions there, and you helped to develop their electronic trading for public markets, which is kind of cool. Are you crazy getting into online capital formation, going from Goldman here? Or are you just on a mission?
It was very interesting when I moved from my previous roles, which was really my career was focused on electronic trading and building out the equities electronic trading ecosystem in the U.S. From that world into the private markets system, which I moved into in 2016 when Rialto was formed. And it was really interesting because there was really no infrastructure, right? And that's the defining, I think, characteristic of what's being built now, which is so great and fascinating. And I think all of our firms are participating in that. And, I'll say that when I first arrived and kind of took a look at it, it was, you had a host of systems, but they were really bifurcated. But it was a symptom of the fact that this was really a industry, or private markets were usually paper-based. Usually people were doing roadshows and creating the documents, and then actually getting the physical papers, and then people were putting those, the documents and papers in their file cabinet. So kind of taking that ecosystem and taking it completely online has been quite a journey, and the industry is finally gotten there. And so to kind of be part of that build out also now in the private market has been fantastic. Also on the primary side, so the primary capital raise, and then in the secondary market transaction space. Getting back to your initial question of, how do broker dealers now look differently from funding portals? I think Eitan really hit it well, which is they can offer expanded services. Now, I think it's important to note that each broker dealer is unique in what they can offer, so it's important to understand what FINRA has granted a broker dealer to do. But for broker dealers that are specifically working in this space, the general benefits are that companies can really exercise more control over their capital raise. So for, companies have started raising larger amounts of capital more times as the caps have been raised. And as they're doing this, companies are wanting to build larger and larger communities and really exercise more control over their raise. And so through using a broker dealer, you can really build out more control over your raise and have more data ownership, more customization around the raise. And the focus is more on the issuer and being able to have a more custom raise experience. And also, with addition to, the broker-dealer can offer other services, for example, supplemental investor outreach, access to institutional capital. Perhaps, I do think that depending on the stage of the company, it really depends. I don't think a seed stage company should come into this process expecting to access institutional capital. There definitely needs to be limits on what's accessible and what's not.
Okay.
Yeah, Andrew,
Right.
I'm happy to add to that. I think the way you phrase it is really interesting and provocative. Like, to go back to the way you phrase the question of, or to rephrase it, are we all crazy for leaving the traditional capital markets to join the online world of capital raising? It's like saying to Tesla,
you're a securities attorney, so you're already crazy, right?
Totally. So the answer is probably yes. Both Sherry and I are crazy. If you said to Elon Musk, are you crazy for trying to sell cars over the internet? Again, the answer is probably yes. Elon Musk probably is a little bit crazy. But the internet changes the way we sell across every industry on the planet, right? And so with the advent of the internet, somebody who is looking to reach a wide audience doesn't necessarily need the old way of doing things, the paper and pen, that Sherry mentioned, the intermediaries that used to call up the high net worth accounts and say, have I got a deal for you? Any merchant can use the internet and the exemptions under the 2012 Jobs Act to reach a audience of potential shareholders who understand the company, who understand its story, who may already be following it on Instagram, may already be getting a newsletter, may already be part of a Twitter community. And so, for me, it's important that people understand the internet changes the capital markets in the same way it changed, retail sales and the sales of automobiles. Does that make sense?
Yeah.
Well, and I think the macro trend of companies wanting to engage their community and engage people in a different way and have this paradigm shift, it also plays into it, right? Companies saying, I want to engage my investors and my stakeholders in a different way, and I don't want to have not just cash. Everyone loves to have capital injected into their company, but I want to just build a different company in a different way. There really is something to that. And I think we've seen that play out over the last couple of years. So that's definitely playing into this entire trend.
Yeah, and although Reg CF,
I'm going to jump.
Just mention one thing. Look, Reg CF had nothing to do with blockchain, but there's a lot of similar DNA where, the thesis is, how can businesses and investors connect more directly through the power of technology? And how can you scale down the level of confidence building intermediation that exists in the capital markets and has developed over the years, while at the same time being mindful of investor protection and other policy priorities. And so that's kind of the balance, and goes back to the question, well, why broker dealers and funding portals, but also to the point that that Matt made about the power of technology and leveraging that to allow the supply and demand side of the communities to interact as directly as possible while keeping important regulatory priorities in mind.
Okay, Alan, I'm going to jump back to you in 1 second, but I had a quick question for you, Matt, because you have a Series 7, a Series whatever, but you're based in Toronto. Do you work with exempt platforms in Canada? Do you cross raise? I'm just curious.
No, we don't. Our focus has always been on the U.S. market. The U.S. is the world's largest market for capital formation. We have some. We have a client base in Canada as well. We are not an exempt market dealer in Canada. My FINRA credentials are U.S. oriented, okay. U.S. based only, and we have a U.S. based transfer agent as well. So we do provide technology services in Canada, and we do help issuers cross borders, but some of the specific regulatory services we provide in the U.S. only.
Okay, all right. I'm going to go back to you, Alan, because T0 is a very interesting platform, and your T0's blockchain or DLT native, and I want to talk about primary issuance and primary offerings because everybody's focusing on primary offerings as well as secondaries. But I want to start with primary offerings. But you're really a digital securities platform. How does that differ for you guys as opposed to a more analog securities raise? Or how does it differ today? Can I ask, Alan?
Yeah, no, look, it's a good question. I think the level of blockchain technology penetration in the capital markets, is principally driven by regulation and secondarily by market adoption and interest from various stakeholders. Our focus, as you said, has been on secondary liquidity. So what happens after a capital raise? Although one of the broker dealers that we own is licensed to work with companies on placement activities, the ones Eitan described, and we've partnered with various folks in the ecosystem on when we have issuers who come to us before they've actually raised capital, while looking to T0 as a potential secondary liquidity platform. Now, blockchain has had and kind of an incremental, iterative progress in capital markets generally. I think in public markets are more challenging than private markets. In private markets, there has been meaningful ability for participants to use elements of blockchain technology, at least in the securities lifecycle. T0 has been using blockchain to provide information on issuers' capital structure and security position in a non-controlling way since 2019, and the ways for issuers to leverage blockchain more deeply in how their securities are recorded, traded, custody, and settled have increased with SEC guidance over the last year or two. And T0 participates across each of these paths.
What are your thoughts on Reg CF?
Reg CF was a very important vehicle to enable capital formation at foundational level of a business, and to the point that was made before, to do that in a way that allows to leverage more direct connectivity between supply and demand through use of technology, but keeps in mind investor protection. There are very specific limits on how and who can participate in Reg CF. And it's a very important vehicle. As we at T0 look at a range of products, CF is appropriate for some things, not appropriate for others. More capital intensive projects, more mature projects, we'll look at other avenues, whether it's Reg A or Reg D or a public offering route. But it's when you're looking at nascent, niche specific early stage projects, Reg CF is a very important vehicle for diversifying access to those opportunities for investors and for bringing capital to those entrepreneurs, and with those investors being able to come in at truly the ground floor. And somebody mentioned private versus public capital formation. When you look at most of the value being created during the private phase of a company's life cycle, Reg CF does democratize access and allow investors within the regulatory parameters to come in at the ground floor and to capture as much of the private cycle value creation as the business case will permit, assuming it does well.
Okay, I'm going to jump over to you, Eitan. You mentioned at the beginning that first of all, you're full stack. You're doing CF, A+, and Reg D, but you mentioned at the very beginning that you've done a lot of Reg A's. I think 215, and that's really been in just the past couple years. Tell me what you're doing with these issuers in this mini IPO type ecosystem.
So Dalmore, pretty early on in the Jobs Act days, was active on the as broker dealer for a number of Reg D issuers, kind of acting as the broker-dealer for online capital raising for Reg D, which is limited to accredited investors only. We saw a uptick in Regulation A activity in late 2018, early 2019, which was when we got involved in Reggae. And since that time, we have onboarded close to 215 Regulation A clients. Not all of them are live. There's a bunch of that are live now, a number that have closed, and a rolling number that are going live. I think one of the reasons why we've seen an uptick in companies considering Regulation A is because you really get to take advantage of crowdfunding, which is kind of what we're talking about here today, right? So if you're looking to rely on and utilize marketing and promotion, or looking to convert an existing ecosystem of fans, followers, subscribers, users, customers, I personally believe that you'll get a lot more potential return on advertising spend and more impact if you're not limited to only raising capital from accredited investors, which I believe is less than 10% of the investor population. Another benefit of Regulation A, unlike Regulation D and Regulation CF, is that there is a immediate path to potential liquidity. Doesn't mean there's liquidity. It means that there's a path to liquidity, meaning you still need folks that are on the bid, and folks looking to sell. But that's unique for Regulation A, and in particular for companies that are looking to incorporate secondary market trading into their model. And we see a lot of that right now, at least, in what we call series issuers for Regulation A. These are companies that they're still qualified to raise up to the maximum $75 million a year through Regulation A, but they're not approaching the offering as a one and done experience. They're looking to build a community of investors that are looking to participate in a number of ongoing offerings. Each offering is set up in its own dedicated corporate structure. We're seeing a lot of this activity in the collectible space, in the fractional share kind of real estate space, in the art space. Dalmore, I think, has 20 or 25 or so platforms, the series issuer platforms that are operating this way. So that's kind of been our experience with Regulation A, and it doesn't have to be so attached to crowdfunding, but it makes sense that it is, because with Regulation A and CF, you really get to leverage the impact of promotion and advertising. Again, because pretty much anyone over the age of 18 could participate and buy shares of your company.
So you're mainly doing Reg A plus, but you are doing some Reg CF?
Yes, like I mentioned, once Reg CF was bumped up to 5 million, we became a lot more interested and a lot more focused on it. Prior to that time, many of our Regulation A issuers were using Regulation D prior to a Reg A to kind of build up a adequate budget, hopefully with a successful Reg D offering. Now a lot of them are using Reg CF for that purpose. And the reason why is because Regulation A it's a pretty expensive undertaking. You need to hire a securities attorney who structures and drafts an offering circular that gets submitted to the SEC for qualification. It takes a lot more time, right? You need to, the 1A, the offering circular, could take quite a while to kind of assemble, put together. And then once it's submitted to the SEC, it takes a few months or so to get qualified by the SEC. Whereas a Regulation CF, while you're capped at being able to raise up to $5 million a year, doesn't require SEC qualification. It's a notice filing with the SEC. So a company looking to launch a Reg CF could be up and running in a matter of weeks, whereas a Reg A, it's going to take you a number of months to get up and going. So we're seeing a trend of companies that have Reg A ambitions. They have a capital need of well over 5 million, but why not start with a Reg CF, try to raise up to 5 million, and then hopefully build a budget to help facilitate a more, a larger and more expensive Reg A offering, soon after.
Okay. All right. That makes a lot of sense. That's interesting that you're saying that it used to be some people would do a Reg D first to raise the money, then move into a Reg A plus, and now that's transferred to Reg CF. I didn't know that. Sherry, so you're a full stack.
Can I just,
yeah.
I'm so sorry. Can I just add on to what Eitan was saying? Because I do think it's interesting. We often, when we're talking to issuers, and even if they're raising slightly over 5 up to 10, we'll sort of ask them, within that range, exactly how much do you need? Because it is true, you can get, we're seeing a shift of issuers sort of looking at the different exemptions within the private sphere and saying, okay, it's not so much about you do a Reg CF when you're young necessarily, and do a Reg A, plus when you're mature and it's really right before you IPO. It's more of Lego blocks depending on the time to market, the types of investors you want to access, and the expense, frankly. And so those different axes in terms of what you're looking to accomplish and who you're looking to access from an investor base is how issuers are coming at this. So we've worked with issuers who have done a Reg CF, a Reg CF, a Reg A, a Reg D, a Reg CF, just to sort of satisfy their capital needs. And it's a very different experience for them, and works quite well. But it's something to just think about. So it's not necessarily you kind of graduate. It's a very different thought process than sort of the Series A through G linear thought process that people think of from a venture capital perspective.
Yeah, and I think the self-executing nature of some of these investments can't be understated. A CF, as Eitan pointed out, is a notice. While there's an SEC filing that's required, it's a notice filing. A Reg D private placement is self-executing. You have to comply with the law. It's advice intensive, it's paper intensive, but it's self-executing. These are important things as compared to Reg A plus that does require SEC qualification of the offering circular. And these things have gotten quicker over time. Wasn't always the case. And so as you think about timing, as you think about other frictions that are inherent in regulatory approval before you can launch an offering, that's very important. Of course, that comes at trade-offs that Eitan talked about in terms of the universe of individuals you can engage with, although some parts of Reg D allow more flexibility than others, including in terms of general solicitation. So, it's really being omnivorous and flexible in how you structure this to the extent permitted.
Okay. All right, Matt, I want to jump over to you because you're kind of a tech platform. It's dealmaker.tech, right?
Yep.
And you're providing kind of a portfolio of services to facilitate a primary offering. Can you share how that works on your platform, please?
Very much like Shopify. If anybody knows Shopify in the online commerce space, then you have a sense of how it would work using DealMaker. The idea is, of course, using the internet, a company raising capital can turn that action of raising capital into a form of e-commerce. They're spending money to promote their product. They're spending money to build their following. They're already engaging an audience through Twitter or Instagram or a newsletter. What we're offering the ability to do is turn that following into a source of capital as well. And so we built our technology to be as flexible as possible, so it could be used by issuers in a Reg A, in a Reg or Reg D. We do both. We allow the software to be configured for both the public-facing offerings under 506C as well as private offerings under 506B. And we, over time, developed the ability for broker dealers to use the platform as their platform of choice when capital raise transactions are intermediated as well. So you just think of it like a soup to nuts end-to-end online store for running an online campaign aimed at raising capital into e-commerce. Does that make sense?
So it does, and it's interesting. Do you only work with broker dealers? Do you work with funding portals too? Are you agnostic? Are there specific BDs or funding portals that you tend to work with? How does that work?
We try to be as inclusive as possible. We think we all have something to gain by the category itself growing. We think online capital formation represents just the teeny tip of the iceberg for what it's going to be in 1 year, and 2 years, and 5 years, and 10 years. And right now we think the capital markets are, I don't know, we can argue whether they're 10 or 15 years behind the retail commerce world, but we think they're following a similar trajectory. The vast majority of capital formation is still locked away in traditional forms of going to market, but the internet and the online capital formation opportunity is, again, we can argue whether it's doubling every year or tripling every year or 10xing every year. We can probably all agree that it is experiencing order of magnitude growth, and I think we're all here for that. We're all here for the growth of that space.
Okay, all right. So 10 to 15 years behind e-commerce. That's interesting. I haven't heard that before. Eitan, how does your company help raise the money? Do you have a list? Do you have a promotional service? Do you match angel money with issuers? Does it just depend? How do you help people actually raise the money, or maybe not so much? How does that work?
So we try to be super transparent with all of our clients and set expectations properly from the beginning, as far as sharing what we have observed working well and not working so well for all of our clients. The Reggae issuers who have raised significant capital, and we've had a number that have raised 50 million, 48 million, 45, 30, 20 million, have not done so by relying on a broker-dealer that promises to introduce them to family offices or high net worth investors or RIA money. In fact, we've seen mostly failure when it comes to relying on someone else to deliver what you really need here, which is thousands of investors in your cap table to make a Regulation A offering work. What we've seen work well are issuers who are able to successfully advertise and promote their offering with a compelling message and as close to frictionless process as possible for investors to participate. What we've seen work well are companies that are fortunate to have an existing ecosystem of customers, fans, followers, subscribers, users, or partnerships with others that could give them access to many more eyeballs that could have the opportunity to see what you're offering and to feel if this resonates to them, and to have an opportunity to participate. What we've seen working are co-listing and syndication opportunities, which you could do for Reg A. I don't think you could do that for CF, meaning for a Regulation A offering, the issuer has a choice. They could choose to pursue a marketplace platform, and there's 4 or 5 very well-known marketplace platforms out there right now that are doing a great job. Or they could choose to list their offering on their own domain. Our model really is designed more for issuers that recognize that at the end of the day, it's going to take effective marketing and promotion for them to raise real significant capital through a Reg A. And if that's the case, why not be the sole beneficiary of your own marketing and promotional efforts, or the sole beneficiary of converting your own ecosystem into investors? But it's not limited to one or the other. We have a growing number of our issuers who we set up with the ability to raise capital on their own domain or app in a very cost-effective way, without distraction, right? So your investors will see and learn more, and they'll be directed directly to your website with a clear call to action without any other offerings listed. but they could at the same time look to co-list their offering with other broker-dealers, with other investment banks, with other platforms and marketplaces, including some of the top 3 or 4 platforms that are out there. And that's a position to potentially have your cake and eat it too, right? You get the benefit of having your own domain and being able to transact and direct all of your PR and marketing and promotional efforts to your own website, while also, in certain cases, having the opportunity to co-list your offering on other platforms. It could be multiple platforms, and that positions you to hopefully, be showcased to other investors that are registered on those platforms that otherwise may not have, known that you exist. So we're seeing that work as well, but it's very important for issuers to understand who are considering a Regulation A offering that it's not a you build it and they come type of a model, right? You'll have a investment button on your own website, but if no one knows you exist, no one's going to come there. It's also important for them to realize that, in my opinion, few who list on marketplaces alone and expect magic to happen and multiple investors to come in are very few are going to get what they had expected or hoped for simply by doing that. They're going to have to market and promote that. And relying solely on digital marketing alone, our experience is it's going to be a bumpy road. I mean, for some, they figure it out pretty quick, but for most, it tends to be longer and more expensive a process to develop an adequate return on advertising spend simply by digital marketing alone. You need to understand the different tools that you have to succeed, and you want to understand how to win before you start the process. Digital marketing is one important component. Co-listing and syndication is another. Financial publications and newsletters are another. And obviously, for those who have an existing base of an ecosystem of customers or followers, amazing, right? That's super helpful as well. Dalmore tries to help issuers navigate the process of whether Reg A or Reg CF is a good fit for them, and what we've seen others do to succeed, and to hopefully help position them with the tools that they need going into this. In addition to in certain cases investment banking services as well.
Okay, so everything you said, it applies equally to Reg A Plus and Reg CF.
CF is different. Reg A, an issuer is allowed to put an investment button directly on their own domain or multiple domains. Reg CF is different. Your offering has to be housed with a Reg CF funding portal or a broker dealer. So you're limited to having your offering on one location, on one page, right? So I don't think it's possible to really syndicate from that perspective. Whereas for Regulation A and Reg D, they lend themselves very well for building a selling group, building a syndicate of other broker dealers where you have your own domain with your own offering listed, but you're not limited to just that, right? You should have that to develop a position of strength and to be the beneficiary of your own promotion, right? As opposed to maybe sending that to a third party. But you could also look to get co-listed on other platforms and with other broker dealers.
Okay, I want to jump over to Sherry. Yeah.
I just want to insert one point that, Eitan, you didn't bring up in terms of the self-hosting. It's important that, it's your branding, but when they are sent to the other sites, those investor networks are then, charging a different rate. And so, really that rate, which is a higher rate in general, it's coming really truly from those investor networks. So you're paying the higher rate as the issuer, but you're paying the higher rate because they're earning their keep, as it were, which is also nice to know from an issuer standpoint. Sorry.
Yeah. No, you're absolutely. And the other point, Shari, is obviously that I didn't mention either is access to when you host your offering on your own domain, you have access to all of the analytics, all the page tagging, all the pixel insertions, heat mapping. If you're responsible for marketing and promotion, which I believe issuers ultimately are, if they want to have a real significant raise, it's super helpful for them and their marketing companies to have access to all the analytics that they need to determine the effectiveness of their marketing and promotional efforts. right? Because that's how they, that's how they know what's working. So you could allocate more of a budget to what's working and converting well, or tweak what might not be working so well. Whereas if your offering is listed on a marketplace, it tends to be more of an opaque process, right, with limited visibility into the effectiveness of marketing.
Yeah.
Okay.
Look,
So
the other thing is that you're missing out on, and I think it's implicit in what Eitan and Shari said, is you're missing out on, with probably cumulative, in kind of person hours, decades of learning that an intermediary gains from advising a range of issuers like yourself. And so while, Reggae does not require you to use an intermediary, that's a difference compared to Reg CF. It's in most cases a good idea to do so, because a completely DIY approach, while it's possible to figure it out from a book, is not going to result in an optimal result for you as an issuer and for your investors down the road, including when you start to think about secondary liquidity. And we'll get to that in a second. So, a lot of the same stuff that was true 20 years ago or 50 years ago is still true today, that, people who've done, Eitan talked about hundreds of these, will be able to help you more than a DIY approach.
Okay, so those are good points. I want to get over to Sherry. Sherry, let me get to Sherry first, and I'll jump back to you, Matt. Because Sherry, you're a broker dealer. You're somewhat similar to Eitan. What does your company, what does your platform do to help issuers raise money? Is there any internal promotion? Is it all self-managed by the issuer? Do you match institutional money at times, or maybe not? Family offices? How does that work at Rialto?
So very similar to what Eitan just went through. So I'll save, I know we're coming up on time, and I want to continue to walk through this. So it's very similar to what Eitan just walked through. We do work with some investment banks. I will say, I do want to caveat this with, those are usually for later stage companies that are usually on a path to an IPO process. And so, investment banks for institutional money, and when I say institutional, that could be, could be a variety of different institutional type money, but also then to work with them on the path for an IPO. But that is generally for a later stage company in this process, not necessarily for your standard early stage private company. In general, when a company first comes to us, it's access a lot of different groups. Start with your own community. You need to have your own community. You need to be able to stand on your own 2 feet. If you don't have your own community, then it's going to be a really long road. Even if you do have your own community, it's still going to be a very long road. Insert that with other communities that you can access through outreach, through other various forums, whether that be newsletters, whether that be other forums, and then make sure you have great digital marketing.
Yeah, and I think I've heard that repeatedly, over time, across platforms, funding portals, broker dealers. It's kind of, that's kind of just the theme of the entire thing. Matt, you wanted to add something very quickly?
Well, just to kind of jive with what Alan was saying, and if we think back to 20 years ago, right? If you were selling shoes, you'd probably put a store in a mall. Why would you do that? Because that's where the customers are. The art of marketing, bringing your goods to market, you go to where the customers are. But with the internet, all of that changes because your customers are everywhere. And so if you're selling shoes today and you believe in your brand and you have a following, and I keep going back to Instagram and Twitter and a newsletter, but any sort of community around you, then you don't need to go in a mall. You open your own online store, or if you're a retailer, you open your own physical store, to carry that analogy. And you say, I believe in myself and I think I can drive my own traffic. And Eitan's right. It's not only about, Google ads and native LinkedIn leads. You need a variety of techniques. And if you want my opinion, what you need more than anything is hustle. If you think you're going to sell, it's because you're going to sell yourself. And because anything that was created in terms of value was because you got up every day, every morning, and you made your calls. The technology can help you, and I agree with Alan. Expertise can help you, and I'm not saying there's no room for expertise, but I do think the fundamental difference between selling shares 20 years ago and selling shares today is the advent of the internet.
Look, 100% right. And look, I think, ability to connect supply and demand side with technology is critical. And a lot more of that will happen, including through blockchain. Ability to have digitally native representations of value that are self-regulating from the point of issuance to the point of retirement is critical. But, you may be very good at selling shoes as an issuer. You're probably less good at raising capital. And, my only point is that talking to someone helps, although that someone should be leveraging use of technology as much as possible. So you're right with that.
Okay, so I want to. So we're running, short on time here, and I want to get to secondary trading here in a second. But I have a question very quickly for anybody. Are any of you offering services post funding? Is there any shareholder management or communication services? Is anybody doing that? Anybody?
We do. So as part of our platform and as part of our mission to build communities, we offer all sorts of digital engagement functionality. What used to be, the kind of old world of investor relations. We offer various software packages so that you can keep that community engaged and provide them with quarterly reports or, have a two-way dialogue about how the company is doing. We also have a transfer agent which manages the fulfillment when you buy a share. If we stick with and buy into my analogy about selling shoes, someone has to ship those shoes. In the capital raising world, the fulfillment of getting you what you bought is done by a transfer agent. So we have that functionality as part of the online store.
Yeah, and look, I think T0's core mission, as I mentioned before, is secondary liquidity. By definition, that's post-funding. Now, that can happen immediately after funding for things like Reggae. It could happen later for things that have to season in order to be transferable under federal securities laws. But we own and operate an ATS out of one of our broker dealers, and we're constantly evaluating other pathways to provide kind of creative post-funding secondary liquidity optionality. To Eitan's point, supply and demand is may and may not be there, but access to secondary liquidity is critical.
So I agree with you. Access to secondary liquidity is critical. I think for most early stage investors, you think, well, when is my exit? How am I going to get a return on this investment? And typically, early stage, they bounce along and maybe nothing happens, or it goes to an IPO, or somebody buys it. It's nice that we're kind of moving into an area where there's platforms like you all that provide secondary trading. Alan, since you were talking about T0, I have a question for you about BSTX, because we wrote a story earlier this week about an issuer, CF issuer, who indicated in the filing that they plan on providing secondary liquidity via effectively an IPO on BSTX. What is that relationship between T0 and BSTX? One's private, one's public?
So T0 is one of the two founders of BSTX. The other one is Box Digital. BSTX is only the 17th national securities exchange in the US. There are only 17 medallions. BSTX is the most recent one. BSTX is also the first national securities exchange that's been approved to leverage blockchain technology in an incremental way. And we expect that level of technology penetration to increase and accelerate. But BSTX is a national securities exchange. So securities that trade on BSTX have to be those of a company that either has gone through an IPO or registers to be a public company as a consequence of listing on BSTX. And so, you're looking at, to Sherry's point, someone who is, at a particular phase in its gestation, that they think deeper national market liquidity with market makers and other participants that provide that liquidity is and a deeper universe of member firms that are that participate on the exchange and bring with it the investors, both individual and institutional, is the right thing for it. And that's those are benefits, and there are costs, including costs of being a public company and being an SEC reporting company, and the cost of getting to that stage, whether it's an IPO or registration of already issued capital.
Okay.
And so the question then, for us, BSTX has been approved. It's looking to operationalize and launch, in the near future. And, we don't view that as a cannibalistic niche. It's complementary to each of the things that my colleagues and I have discussed.
Okay. So I want to keep this moving because we're running out of time. Sherry, you operate an ATS. How is that working for your issuers?
Sure. So we operate an ATS across all private markets in both traditional and digital form, which is blockchain-based form. So we can handle both traditional private securities as well as blockchain-enabled private securities. And I think a couple of differentiators in terms of our ATS is we are retail direct. So direct retail investors, subscribers can trade on the ATS. They don't have to custody their securities anywhere. And then secondly, we have a variety of participants on the ecosystem, both from the standpoint of we have larger Regulation A issuers on the platform, meaning so it's not just traditional retail, but also accredited investors and larger investors on the platform, as well as we are supplementing that ecosystem with RIAs and other types of investor groups so that we've got a diversity of a network on there.
So you enhance liquidity effectively, right?
We don't like to say liquidity. These are still private private securities, and this isn't like you're buying and selling IBM. It's not a $100 million market cap. It's not going to be a liquid security. We like to say, there's a monetization opportunity. So I just want to set expectations.
Right. Yeah, I hear you. Eitan, I have a very quick question for you. And then we have a bunch of questions in the chat here. You mentioned something the other day, which I thought was interesting, and I want you to share that with us about fractionalization. And you're working with other providers to facilitate this. Can you explain that for me and everybody else?
Yeah, I'll try to be quick with it. But like I mentioned previously, there's a one and done type of a capital raise, right? Issuers for Reggae at least could get qualified to raise up to $75 million a year by issuing shares or debt in their offering. Then there's another approach called a series issuer, which we call kind of fractional share issuers. And they're qualified to raise up to $75 million also, but they're doing so incrementally, where they're releasing specific assets like Michael Jordan's rookie card, right? $100,000, breaking it up into $10 shares, and then in essence, IPOing that to the public, one after the other, right? Each is in its own dedicated corporate structure. So investors could buy $10 shares of a Michael Jordan rookie card. That's where we're seeing a lot of the secondary trading. Dalmore hasn't applied for an ATS. Instead, we've chosen to partner with a number of different ATSs. Each has their own level of qualification and experience, cost structures. So we help advise our clients which is the appropriate secondary trading path for them. But again, we've on the Reg A side, we've facilitated over 1 million primary investments since 2019, and over 100,000 secondary market trades already over the last number of months. And most of those are coming from our fractional share issuers in the single family home real estate space, in the art space, in the racehorse space, athlete contracts. It happens to be my favorite utilization of the exemption because it's not a one and done raise. It's a community building exercise where issuers are setting up their own app, right? And they're bringing asset after asset, opportunity after opportunity to their investor base, giving them the opportunity to build a portfolio, right, of these assets, and then facilitating secondary market trading of those assets. And with Reg A, it could be immediately after the offering is completed. So that's where we're seeing significant growth in the space, and it also crosses over into the digital security NFT space, right? When 2020, we saw 95 or so million of NFTs issued. 2021, it jumped up to 24.9 billion, right? And so if you want to do business, if you want to sell fractional shares of digital assets, or whatever you want to call them, or we call them securities in the US. If you want to fractionalize, facilitate the primary issuance and the secondary market trading of these assets, I think that the industry is already, I think we're already there, where it's certainly a more conservative way to do so if you want to do business in the US is through a broker-dealer. You could tokenize, you could fractionalize, you could sell, and you could facilitate secondary market trading of all of your NFTs just in a regulated way. Ultimately, in the regulated world, the transfer agent is the ultimate authority on the cap table, SEC approved transfer agent. You could still utilize blockchain technology, but in essence, at this point at least, it's mirroring what's going on at the transfer agency. I think blockchain technology is going to reach its potential in the future as regulations continue to evolve and as jurisdictions continue to open up around the world that allow for multiple investors to participate in these securities offerings.
Yeah, okay, so we're running short on time. I want to jump over to some questions because there's a lot of them here, and give people the chance to answer some of these. Sherry, how long does a Reggae Plus offering take from day one, let's do it, to we've raised our money? Can you provide a range?
The money. Yeah. We generally say it takes a minimum 4 to 6 months to launch, and then so we because there usually are issuers that think that they've got all of the paperwork put together, everything that is set, and usually there's something, the audit needs something outstanding, there's something from a corporate perspective that needs to be pulled together. So we generally will say 4 to 6 months for a Regulation A offering to get that live. Then once it's live, it really depends on the issuers. We've seen, it depends how much they're raising. So, $10 million, we've seen issuers raise that in a couple months. $50 million, it might take a little bit longer. Probably will take a little bit longer. Depends what your company is, how many raises you've done, how large your community is. So there are a lot of factors at play.
Hey, Matt, I got a question here. What do you need to do to ensure that a Reg CF offering gets noticed?
Same answer as Sherry and Ethan and Ethan from earlier. Like, this is not get rich quick. There's no, hey, here's a flag. People are gonna see it and come flocking. I don't tell issuers how to build a campaign. They need to, and this goes back to what Alan was saying. They need to have proper advice on how to pursue an offering. There's a lot of noise on the internet. I know I keep talking about the internet as this magical technology, but there is, it is, but there's also a lot of noise on the internet. So I hope it's helpful to say, but that, it's very similar in my view to how you would run an e-commerce campaign. You have to get noticed, whether that's by creating ads or creating content or having a story that's going to hit, or having a product that people understand and believe in, or ideally, having a product that people are already in market buying, and you start with those customers who already know you, right? And you can build your community that way. Look, we had the Green Bay Packers do a common stock offering on our platform. What they do to get attention is very different from what what a newly incorporated company or kind of a new market entrant is going to do in order to get attention.
Yeah, that's a good point. I'm going to jump over to Alan because there's a bunch of questions here. We'll do one or two more. Somebody pointed out that private markets, they dwarf public markets in regards to like IPOs and primary offerings. Coming from T0, how do you expect that to grow over the coming years? I have my opinion. I'm curious as to what yours is, and this person's too.
Yeah, look, I think it's a great question. And so private markets dwarf public markets. Private market value creation dwarfs public market value creation. Private market secondary liquidity is tiny, based on whatever metric you use compared to public market liquidity. So when you talk about convergence, what I think you're going to continue to see, and you've seen this already with people like T0 ATS and Rialto and other folks in the ecosystem, you're going to see convergence in terms of secondary liquidity paths, for real, continuous, automated secondary liquidity that bleeds into private markets. I think you're going to see technology continue that will provide more avenues for investors and issuers to interact directly through self-regulating smart contracts behind blockchain-based securities. I think intermediaries are still going to play a role in that ecosystem from a regulatory perspective for some time. But that's for us, it's an opportunity set because private markets, particularly need to improve a lot on the secondary liquidity side, including from perspective of democratizing access to a lot of these assets to investors who weren't able to participate at the issuance stage. I'll mention one other thing, what Eitan talked about before with NFTs and securities. I think a lot of these instruments are securities, and some folks have been doing it the right way. I think regulators have made policy statements. I think you're going to see more concrete directions, and that again will kind of expand the private asset universe that you talked about, and that needs a home in the regulated environment.
Yeah, so everything needs to be regulated. Last question, Eitan, can you give me briefly one example of a successful offering? Just pick one that you worked with.
I'm going to shy away from giving specific names, so I don't have to give the disclaimer of this isn't a endorsement or an offer to purchase or sell securities. We do list a number of our successful offerings on our website, so anyone could kind of take a look at some of our current clients and some of the closed transactions or a number of the compliance approved press releases that we've put out. But we've had a number of really interesting Reggae raises. One of them, without mentioning a name, was in the cannabis business. They raised $50 million in under 3 months, which I think was a record breaker, certainly for us. We had a client in the solar power card space that raised close to $20 million or 16 or $20 million, I think, in around a week. We have a current client with a live offering that's in the prefab home space that has raised, and this is an interesting one that we got co-listed on 2 other marketplace platforms. So it's a client in the prefab home space that's raised, I think it's 17 or 18 million dollars at this point within a few weeks. That's listed on, they have their own website with their hosting their domain, where they're directing all of their marketing and promotion efforts to, but they're also co-listed on 2 other platforms. And one of those other platforms, I think there's been around $10 million so far that's been invested. So it's really across the board. A lot of our success also are in these fractional platforms, right? That they're also listed on our site in the collectible space, in the single family home space. Those are super interesting and also give a path to potential liquidity to issuers.
Okay, we're going to wrap this up because we're running out of time. I'm going to give everybody, one sentence, very briefly, words of wisdom, final thoughts. We're going to start with you, Sherry.
Great. I'll unmute. A lot of people were asking, how are you successful? How can you be successful in terms of a raise? I see that there are a lot of folks looking to raise capital here. I really think it comes down to 3 things. You really need to have something. Retail investors are increasingly sophisticated these days, and they're looking to buy into something that's real. You need to be committed to getting your story out there. So you can't just sit back, set it and forget it and hire a digital marketing firm. You need to be engaged. You need to be out there in the public, and you also need to have a digital marketing firm that's not, that you can pass on that. And then you also need to be committed to taking the time and not cutting corners. So, those are sort of, in summary, what I would say.
Okay, Matt, you.
Okay, I'm gonna add a fourth. You need to believe in yourselves. If you believe in yourself, you can drive traffic to your own site, you can build your own community, you can turn your own stakeholders into a source of capital.
Awesome. Alan.
Yeah, look, technology, whether you talk about internet and digitization of data and voice, or you talk about blockchain of digitization of value, is great. But technology is not a shortcut to compliance. It's not a shortcut to disclosure. It's not a shortcut to having a well thought out capital raising plan and post capital raising life cycle as a company and as a security.
Awesome. Eitan.
Work with an experienced team, counsel, broker dealer that's done it before, and try to figure out as much as you can how you're going to win before you start. You want to come in with other advantages other than I'm going to build this, I'm going to hire a marketing company and I'm going to hope, or I'm going to list on a platform and I'm going to see what happens. There's multiple tools to use. There's digital marketing, there's PR, there's co-listing and syndication, there's investment banking, there's financial publications and newsletters, and other things. So that's what we're focused on, is what are all the tools that are at your disposal and what's most appropriate to kind of help you, the issuer, succeed for what's ahead.
Absolutely. It's not a field of dreams. You don't build it and they come, as you mentioned. It takes a lot of work, but it's a new world with technology, digital securities offerings. And if you have something, Sherry, that is a good product or service, this really can be effective for you, for issuers, for firms in need of growth capital. So I want to thank the four of you for participating in this webinar today. And I want to thank everybody who attended this webinar. We will be posting it so you can watch it later on, and we'll be promoting it on crowdfundinsider.com. So thank you, everybody, and we look forward to seeing you at future webinars. Take care. Thank you very much.
Thanks so much.